So guys, this is the weekly chart. Let me write it down. This is the weekly chart. Weekly chart means one candle represents 1 week, right? Now what you are going to notice here, so first let's talk about the candle itself. So if you look into the candle, it's a heavy bull candle where the high of the candle is almost closing of the candle. Whenever such a situation is seen, okay, and particularly we are seeing that for last 1 2 3 3 weeks, okay, the market is bullish. So when I say market, I mean SP500. This means that in the coming week, particularly on Monday, we can witness or we can expect an upward movement. Now, to how far the S&P 500 will be able to move up or down, so that we will define on the daily chart. But as of now, this is clear that on Monday, either we are going to see a gap up open, or irrespective of the open, we are going to see an upward movement in the S&P 500, right? So this is with the candle. Now let's talk about the technical indicators on the weekly chart. Remember, we are talking about the weekly candles, weekly chart. First comes the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. This means that the S&P 500 is bullish through the Bollinger Bands. Then comes the moving averages. Moving averages clear fan out supporting the bear trend. But the closing of the S&P 500 is above all of the moving averages. This means the S&P 500 is bullish through this way. Means because it has closed above all of the moving averages. But the pattern of the moving averages is still bearish. This means as of now, moving averages will be neutral for the S&P 500. Now comes the Ichimoku. Up to last week, the S&P 500, it was trading below the Ichimoku. So up to last week, it was bearish. But now this week, the S&P 500 has breached the Ichimoku cloud and it has entered into the Ichimoku cloud. This is a conflicting situation. This is a dangerous situation. So when I say conflicting or dangerous, I mean that you might be seeing that it is moving up. Yes, it is moving up. But until and unless it comes out to this, the other side of the cloud, no one knows what is going to happen to the S&P 500. It can come out this way. It can come out this way. So this is in the Ichimoku cloud. So if you see that it was coming down, and then there was a retrace, then came down, it was coming down. So everyone was expecting that it is coming down, but rather there was a very heavy reversal, very heavy bull reversal. As of now, what you are seeing, it is moving up, and it can, and you can see that yes, it is moving up or it is going to move up. But now what will happen all of a sudden? It can come down. Means as of now, we do not know whether it is going to exit this side or this side. This is particularly with the Ichimoku cloud. So as of now, again through Ichimoku, it is neutral. Last week it was bearish, but now it is neutral. Now let's see what other technical indicators are saying. If you look into the MACD, bullish momentum is now building up in favor of not the bullish momentum, but the momentum is building up in favor of the bulls. Secondly, the MACD is more than the signal. This means that because the directional MACD is bullish and the momentum is also favoring the bulls. This means through MACD, the S&P 500 is bullish. However, again remember that the MACD is negative and the signal is negative. This means still on the broader scale, on the broader chart, the S&P 500 is bearish. It is bearish. So whatever you are seeing this kind of reversal, this is a short-term bull trend. Now when it will be the long-term bull trend, it will be the long-term bull trend only and only when it crosses or it comes out this side in the bull side of this the Ichimoku cloud. Secondly, all other technicals means the S&P 500, the MACD, both are positive. Everything is positive. Nothing is negative. All are bullish. Then only we will say now yes, now it is in the long-term bull session. But as of now, this whatever you are seeing, this is a short-term bullish session. Okay. Now comes the stochastic RSI. Again, the same problem that it has created for the S&P 500 for the in the last week. Last week the K channel was 100 and the D channel was 85. Then in the immediate week, means up to yesterday, what happened is the K channel is 100 and the D channel is 95. It was supposed to be 100, but now it is 95. Anyways, so if you see, the K channel is 100, again saturated, overheated. The D channel is 95. This means the next week on Monday, immediately when the S&P 500 or immediately when the stock market opens, what will happen? Both the K and the D will become 100. 100, both K and D. And this will be the perfect situation where we can expect a reversal, a bear trend or a downward movement in the S&P 500 in the next week. Not because of anything else. See, everything else is saying that the market is safe, the S&P 500 is safe, but the stochastic RSI, the technical, particularly this technical stochastic RSI, the K is already overheated. The D is going to get overheated. On Monday, the D will be 100, absolute 100. So that will say both K and D are 100. It is now superheated, overheated, it is saturated, and it must cool down. In order to cool down, the S&P 500 will have to come down. So what will happen? So this is something that we were expecting last week. Means sorry, not last week, but in this the previous week. So this candle, this bull candle that you are seeing here, this bull candle was not supposed to form, rather a bear candle with 2 to 3% fall or 3 to 4% fall was supposed to form in order to cool down the technical, and thereafter the S&P 500, it was supposed to regain its bullish momentum. But now because it failed, it has formed a bull candle, it is moving up, the technical is overheated. Monday both will be 100 each. So that is not good for the S&P 500. Not just for the S&P 500, but for the Nasdaq, for the Dow Jones, for the overall stock market. This is not good. So as of now, we will say that yes, through the stochastic RSI, the S&P 500 is bullish. Then comes the divergence. So as of now, the divergence is normal. Divergence means the divergence in the closing prices of the candles. Then comes the volatility. If you look into the volatility, volatility is almost more than 90% or 93% or 94% of the all-time high level. This means the S&P 500 or you can say the overall stock market is heavily volatile. It is still heavily volatile on the weekly chart. So now what we have seen here through all of the technicals is that the Bollinger Bands bullish, Ichimoku and the moving average is neutral, MACD is bullish, and the stochastic RSI is bullish. Three technicals are bullish, two technicals are neutral, but there is no technical that is bearish. So as of now, we will say that yes, the S&P 500 is in the short-term bull trend. Now let's see what is going to happen on the daily chart, because see, this was the weekly chart. We have deduced what is going to happen on the weekly chart, but there are 5 days in a week. Now what is going to happen on August 15th Monday, what is going to happen on August 16th Tuesday, August 17th, August 18th and August 19th Friday, that we will look into the daily chart of the S&P 500. So guys, now let's move on to the daily chart. So guys, now we are on the daily chart of the S&P 500. So if you see that this is the daily chart and these are the daily candles. So let me write it down. This is the daily chart, okay, and these are the daily candles. So before I do the technical analysis on the daily chart, I want to show you the inflation chart. This is the inflation, United States inflation rate year on year. Okay, so when you look into the inflation chart, earlier the technicals up to up to the month of June, so the technicals were extremely bullish. Now if you look into the technicals, the only change in the technicals is this, the stochastic RSI. So now because the inflation has come down to 8.5, the stochastic RSI, if you look into the K and the D channel, the K channel is almost 659, the D channel is 78. This means the stochastic RSI is now clearly bearish, whereas up to the last month, it was still bullish because the D channel was more than 90 and the MACD and all of the technicals were super bullish. And that was the reason why I predicted this, the 9.5 to 9.6. Other than that, in the month of May, it was again bullish and it was holding above. That was the reason I gave you 9.1 to 9.2 and it hit exactly 9.1. So what it means? the technicals, through the technicals, the inflation means that it looks like that the inflation is coming down, but if you see that still the inflation is holding, it is not coming down, it is just holding. This was in the month of March. In the month of March, inflation was 8.5. In the month of April, it came down to 8.3. Then it moved up, and then again it came down. So this is the 8.5. It is holding. It is not coming down. It is holding. Technicals are saying that it is coming down. So not technicals, but only one technical is saying that it is bearish. But if you see, it is holding. It is holding, right? This means that we need to see what will be the inflation in the next month. If the inflation comes out to be a little more than 8.5, maybe 8.6, maybe 8.7 or 9 or anything above 8.5, in that case the market will consider, the stock market will accept it as a regain of the bullish movement. So you will see up, down, up, and then a bit down, then hold, and then it is again moving up. So this will be the pattern of the inflation. And this is what I told you guys, that I look into the numbers, I look into the technicals, I look into the data. I do not look into the news, I do not assume anything. Based on the technicals, whatever is there, I tell you. So most of the times you will see that yes, it is exactly what I'm telling you. And a few times you will notice that the market is not moving as the technicals were suggesting. Now let's do the technical analysis. So guys, again, one more thing before the technical analysis, I have the YouTube membership that I have discussed in the beginning of the video. So if you want to join my YouTube membership, so if you see that I do the daily analysis, so I give the daily SP 500 technical analysis to my YouTube members in the form of the videos, in the form of the community notes, the text notes. Now, in order to join the YouTube membership, so I have given the link in the description and in the comment section. So all you need to do is to click on the join button. Once you click on the join button, then you will find these the two options. One is only one midweek update per week. One is all midweek updates per week. And if you see that most of my members, they have joined for the all midweek updates. So you will notice that most of the members, they have joined the all midweek updates. So there are many members who have already joined the channel. So whenever you want to join, you can simply click on the join button, pay a nominal price, and you will be able to join the YouTube membership. So I have given the link in the description of the video and also in the comment section. So guys, now we are back to the chart, the daily chart of S&P 500. So guys, before I do the technical analysis, let me tell you the support and resistance levels. So as of now, we have an immediate resistance, and this is our golden resistance at 4291. This is 4291. And if you are subscribed to my channel and if you are watching my technical analysis for last many months, for more than a year, then you know the magic of the 4291. And even if you do not know the magic of 4291, not to worry, I am going to tell you the magic of 4291 in this video. Then after this the 4291, then we have the next resistance at 4310, then 4343, then 4370, and that's it. 4370, that's it. Now why I am saying that the 4370 and not anything above the 4370 as of now? There is a reason, and the reason is again the 61.8% of the Fibonacci retracement. So let me first cover the support and resistance level, then I will tell you about this 4370 and 4291. Now when we talk about the support, so the support is at 4265, then we have 4237 or 38, then we have 4207 or 4210. Then the support is at the 200-day moving average at 4185. This is 4185. Okay. Then the next support comes at 4150, 4110, 4065, and then 4035. 4035. So as of now, if it comes down from 4280 to 4035, then it will be a fall of approximately 6%. 6% within a week, yes, that is normal. Means this can happen. So now, for now, let's stick to 4035. So 40352 to 4370, these two levels. Okay. Now, so the yes. So now comes this the 4370. So guys, now let me tell you these the two numbers 4370, 4370 and 4291. 4291. So first let me tell you about this the 4370. So for this the 4370 we are going to draw this the Fibonacci retracement from the all-time high of the S&P 500. And when was that the all-time high? That was on 4th of January 2022. This was the all-time high level, and then this the all-time, sorry, not all-time, but this was the low level in the month of June 2022. Okay, approximately. So now if you see that this is the Fibonacci, see the name is what? The name is Fib retracement, Fibonacci retracement. Okay, the name says retracement. Retrace means if this is the movement, then it will retrace this way. If this is the movement, then it will retrace this way. This is the retrace. Okay, Fibonacci retracement. Now if you see that through this the Fibonacci retracement, what we are seeing is that there is a number, and this number is the 61.8%, and this is 4370. So 61.8% is the golden ratio in this the universe. Everything living or non-living is defined by 61.8% in this universe. Okay, in the mathematics, okay, in terms of the number, 61.8 is very well respected by everyone. The hedge funds, the big companies, the manipulators, the everyone. No one will be willing to breach the 61.8% because they know what will be the consequences if they breach. 61.8% must be respected, and it is always respected. And that is the reason, when we source the Fibonacci, sorry, so let me tell you this. So when we source the Fibonacci from the high of March to the low of this the June, again the same level, then you will notice in this case the 61.8%. The 61.8%, it comes out approximately 4255 or 4257, etc. And that was the only reason why yesterday and day before yesterday the S&P 500, it hit the exact number and it came down heavily. So this is the 61.8%. This is the magic of 61.8% of the Fibonacci retracement. It must be respected, and it is always respected. Okay. Now yesterday also, when the S&P 500 it was trying to move up for more than 1 hour, more than 2 hours, it was trying to breach this level, and at one point of time it looked like that it is going to give up and it will not be able to breach, and this will be the final reversal. This will be the final retracement. And this was the same thing that I told to my members yesterday on August 12th, that see, a reversal is anticipated if the S&P 500 fails to breach. If the S&P 500 fails to breach this particularly 61.8% level, that is around 4255, and if somehow if it breaches the 4255, then it will further move up because the technicals are bullish. So this is how I keep my members informed on the daily basis, what is happening, what is going to happen, etc. So guys, now I hope that you are familiar with the 61.8% Fibonacci retracement level. So the big one is 4370. Okay, and that is the reason why I'm not talking about anything above the 4370 as of now. Now let's talk about the 4291. That what is with the 4291? So now what you are going to notice? You will notice that when the S&P 500 it was heavily bullish, it moved up on 2 days or 3 days, it holded around 4291. It moved up, then it came down, it hit exactly the 4291, and then there was a retrace. Then again it came down, it breached the 4291, it came down, then again there was a retrace. This means that the S&P 500 has given a retrace around 4291. It hit the 4291 3 times or more than 3 times, and thereafter only it was able to move up. Anyways, it moved up, again it came down, it failed to hit the 4291, there was a retrace. Then again it came down on 3 times, on 3 or 4 days it hit the 4291 and then there was a retrace. So this is with the 4291. Now when it moved up and up, now when it came down in the month of January, then what happened? In the month of January, when it came down, it hit the 4291, it hit the 4291, it breached the 4291, retrace, right? On the other day, on the next day, it again came down, it hit the it hit exactly 4291. This is the exact hit at 4291. Okay, it hit the 4291 and then there was a retrace. Then the next day retrace, and then on this day also it came down, it hit exactly at 4291, just around 4291, then there was a retrace. So there are these multiple hits at 4291, then the retrace, then again. Finally this day it came down, it breached the 4291, but the next day it immediately retraced, then it came down, then again a retrace, then hit 4291, 4291, 4291, 4291, 4291, then again 4291, 4291, 4291. So this is all about the 4291. This is why I am saying that 4291 is our golden resistance as of now. It is, see, 4291 is the golden resistance as well as the golden support. And this 4291 is not the standard resistance or support level. It is not the standard pivot level. This is what I have calculated. I have analyzed a lot of data, and after analyzing that data, I have calculated these the support and resistance level. So whatever I mentioned here, okay, at the right hand side, these are all what I have calculated. These are not the support, standard support or the pivot data that you can find, anywhere else. So this is with the 4291. So now I hope you are clear with the 4370 and also the 4291, that why I am emphasizing on a reversal from 4291. A breach, yes, definitely there can be a breach of 4291. Okay, the S&P 500 can breach the 4291 by like 5, 10, 15, 20 points, not a problem, but it has to respect and it has to come down. So guys, now we have seen this, the 4291, 4370. So this is 4370. Sorry, this is 4370, and this 4370 is the 61.8% of the Fibonacci. It is the 61.8% of the Fibonacci retracement level, right? So we are done with the support and resistance levels. Now let's find out the probable movement of the S&P 500 through the S&P 500 technical analysis. So we are going to see what is going to happen on Monday, on August 15, 2022, August 16th, Tuesday, and up to August 19th, Friday. That what will happen in the S&P 500 index. Again, guys, whatever I am telling you is through the technicals. So now when we talk about the movement, you need to understand that this was the previous consolidation zone. This was the recent consolidation zone. There came a bullish breakout, and now the stock market is bullish. Now the S&P 500 is bullish. Guys, I am really very sorry that I forgot to do this, the S&P 500 technical analysis on the daily chart. So let me quickly do this, the technical analysis on the daily chart for this S&P 500, because we have already done the technical analysis on the weekly chart. On the weekly chart, we have seen weak short-term bull trend. Okay, 2 neutral and 3 bullish. So on this the daily chart, if you see, on this the daily chart, if you see the Bollinger Band, this is the upper band of the Bollinger Band, this is the median of the Bollinger Band. S&P 500 is bullish through the Bollinger Bands. It is trading above the Chimoku cloud, it is bullish. It is trading above all of the moving averages, fan out in the moving averages, and yes, and the closing is above the moving averages. This means the S&P 500 is bullish through the moving averages. Then comes some other technical indicators. MACD is clearly bullish. It has regained its momentum that it was losing earlier. Now it has regained its bullish momentum. If you look into the stochastic RSI, the K channel is 99.18 and the D channel is almost, so K channel is, so in simple words, K channel is 99 and the D channel is 91. Okay. Now there is an interesting thing. On Monday, when the S&P 500 will see a gap up open, or when it will try to move up, the K channel will become 100 and the D, let's see if the D has the possibility. No, D does not have that much possibility, but the K channel will be definitely 100 on Monday. So means the K channel, or this means that the K channel of the stochastic RSI will be saturated. It will be overheated on Monday. Then the divergence, as of now, the divergence is okay. So the divergence is increasing. That is not good. That is not good for the bulls. So the divergence earlier for last many weeks, for last many months, it was normal, but now it is increasing. On Monday, the divergence is expected to peak, and it may peak also on Tuesday or Wednesday also. But before that, we will be able to see a reversal. Then comes the volatility. Volatility on the daily chart, it is normal. On the daily chart, looks like that the volatility is normal. This means that through all of the technical indicators on the daily chart, we can clearly see that the S&P 500, that the SP500 on the daily chart is clearly bullish. It is bullish through all of the technical indicators. But now this bullish movement is going to find some resistance. It is going to see some resistance. It is going to see some resistance, not because of just one factor, but because of multiple factors. So we have 4291, then we have the K channel and the D channel 100 each on the daily, on the weekly chart of stochastic RSI. Then we have the K channel 100 on, that will be 100 on Monday on August 15, 2022. So it will be 100, the K channel of stochastic RSI. Then we have the divergence. The divergence will also peak on Monday, Tuesday, it will peak. So there are multiple factors. Now let's look into the probable movement of the S&P 500 through the SP500 analysis on this, the daily chart. Again guys, we are using the technicals. Everything is through technicals. And when you are looking into the probable movement, when you are using the probable movement in order to trade, then you must also look into other factors that will be there on that particular day. And again guys, the probable movement is not a financial advice of any kind. So now in this, the probable movement, one thing is clear that, or this, the first thing is clear that on Monday, on August 15, 2022, on Monday, either there will be a gap up open, or irrespective of the open, the S&P 500 will move up. This thing is clear. Okay. So this was the very first thing. Now comes the second thing. The second thing is that when the S&P 500 it try to move up, it will find the resistance in the zone of 4291. What is the zone of 4291? Historically, the zone of 4291 is plus minus 10. So you can say anything from 4280 to 4300 is the zone of 4291. So anything from 4280 to 4300 is the zone of the 4291. This is the resistance zone. And if you look into the closing of the S&P 500, it is 429. It is only 4280. That is the lower the lower level of this particular zone. But because it will be able to move up on Monday, on August 15th, this means that it will enter into the zone of the 4291. And we need to look into the movement. If the movement will be dull, if we see that it is struggling, then on Monday itself it will come down. Now guys, there is one more thing. Last week, means that was the week of what? That was the week of 29th of July, August. Yes, that was the week of August 1st, 2022. So in the week of August 1st, 2022, I told you that we are, because this was the fake run. See, this was the fake run. This was the manipulated run, and that was the reason earlier I was strongly recommending, or I have strongly said that no matter what, the S&P 500 will not be able to breach this the level of 4035 because it is bearish. But on 27th of July, because of the verbal comments of the Fed chairman, there was a fake run. This was the heavy manipulation of the S&P 500, the overall market, the Nasdaq, the Dow Jones, and that was the reason it was able to breach the 4035. So technically it was not supposed to happen, but with the manipulation, yes, it happened. So yeah, so what I'm trying to tell you is that in the week of the August 1st 2022, I told you that we can witness the profit booking. Okay, but it did not happen in the week of 1st of August. This means that the market that is holding here, then there was a bullish breakout. This means the profit booking is going to happen sometime soon, and when it is expected? On Monday itself. So on Monday, August 15th, 2022, we can again expect profit booking. What is profit booking? Profit booking is that this is the bull movement. This is the bull movement. Whosoever has bought here, whosoever has pumped a lot of money here in order to manipulate, in order to give a heavy push to the S&P 500, this person is now going to exit. This person will book his profit. In order to book the profit, first he will move the market up, and because now the candles themselves and the technical indicators are saying that the market means the SP500 is bullish, so the SP500, it will first move up. And what will happen? The retail traders, okay, they are impatient, they will jump in, they will buy, and there will be a lot of volume. And then this person or these people who have bought here or who have pumped a lot of money, who have manipulated the S&P 500, what they will do? Then they will sell. They will sell. And when they will sell, then what will happen? With that selling, it will come down. This is what we call as the profit booking. So profit booking, it generally or mostly it happens on Monday. Okay, but sometimes when we do not see the profit booking on Monday, then we can expect it on any other day of the week. But mostly, more like 60% of the time, 70% of the time, the profit booking, it happens on Monday. So this means that technically S&P 500 is bullish on the daily chart. Yes, that's right. Technically it is bullish. On Monday, we are going to see a gap up open, or irrespective of the open, it will move up. Yes, that's right. It is expected to happen technically. Again, I repeat, technically it is expected to happen. Now, when it will move up, it will be in the zone of 4280 to 4300. Means it will be in the zone of 4291. It can even try to breach the zone of 4291. That's nothing new. That is normal. But again, what will happen on Monday? We will be seeing, or we will be expecting the profit booking. We can expect the profit booking now, because this was the first leg. This is the second leg. So in the second leg, this is the perfect situation. This is the perfect scenario, because technicals are overheated. The golden resistance is there. Everything is there. So it is a perfect scenario, perfect situation for these market manipulators. So they can simply dump whatever they have bought and they can book the profit. Now when the S&P 500 it comes down after getting rejected from the 4291, this means that now it will be on the bearish run. But before it can come down very heavily, it can just one more time it can again try to hit the 4291, but again it will fail and it will come down. This is what has happened with the 4291. This is what happens with the 4291. Now whenever it comes down, it will first find support at what is this? This is 4265 at the right hand side, 4265. Then we have 4237, the next support. Then we have 4207 or 4210. Then finally we have a very good and very strong support at 200-day moving average. This is what? This is 200-day moving average, 4185. So this will provide a very strong support for the S&P 500. If the S&P 500 breaches this the 4185, then we have 4150, 4110, 4065, 4035, and so on. So this is the first scenario which is most likely to happen. Technically, this is most likely to happen, and this is the first scenario. Then comes the second scenario. Now the second scenario is that on Monday it still moves up, and without giving a reversal, let's say that profit booking is not going to happen on Monday. So in the second scenario, when the profit booking is not happening, then what will happen? In that case, it will have to move up. So either it can move up heavily, or it can form a small candle, just a very small candle, or a dodgy kind of candle. Okay. So second scenario is when it is moving up, or it is holding in the zone of 4291, and it is forming a dodgy kind of candle or any other candle. Okay. In that case, again on Tuesday, In that case, on Tuesday we will see a reversal. Why? So why the reversal on Tuesday? The reversal will be not because of the 4291. The reversal will be because of the overheated technicals. Because in this, the second scenario, there was no profit booking on Monday. On Monday, the S&P 500 is going to hold. So on Tuesday, it has to come down in order to cool down the technical. In this, the second scenario. So whether it happens on Monday, whether it happens on Tuesday, it has to come down in order to cool down the technicals, and we also have the 4291. Now comes a manipulated scenario, a very heavily manipulated scenario. In that manipulated scenario, you can see a very heavy run, an upward run, very heavy upward run, means a heavy bull candle on Monday, means the technicals are saturated, everything is saturated, but still the S&P 500 is moving up. Then on Tuesday also it is moving up, but on Tuesday then it will hit the 4370. What? The 4370. And the 4370 is the 61.8% of the Fibonacci. Then from this the 4370, then from this the 4370, the final bearish journey will begin. So these are the scenarios, and this is how technically, again technically, this is how the S&P 500 is expected to behave. This is how the S&P 500 is expected to move. Now there is one more scenario, but there are less chances, but still let me discuss that scenario also. That scenario is that on Monday itself, there comes a gap down open. There comes a gap down open. Now what I mentioned, that irrespective of the open, the S&P 500 will move up, right? So it will move up. Even with the gap down, it will move up. Now with the gap down, it try to move up, but it doesn't give you a very heavy upward movement, just a little bit upward movement, and then it comes down. So what that means? That simply means that the big ones, they are aware about the situation, then they are aware about the technicals. So they are now trying to cool down the technicals, so that on Monday, Tuesday, or on Wednesday. So Wednesday will be what? Wednesday will be August 17th, 2022, or on Thursday, August 18th, 2022. They will be able to give an upward push, and that push will then take it to the 4370. So this scenario is so the chances of happening this scenario are less, but still we need to discuss it, and I have discussed the scenario. So now we have the three scenarios. Number one scenario is this is something that is most likely to happen. First, we will see a gap up open, or irrespective of the open, we will see an upward movement. This upward movement will be in the zone of 4280 to 4300, right? And then thereafter, the big ones, the manipulators, they will book their profits, and the S&P 500 will come down. Not just S&P 500, but Dow Jones, Nasdaq, all of the indices, they will come down, right? So this is the first scenario. Now the second scenario. So the second scenario is that on Monday the S&P 500, it tried to move up, and it is able to hold, and it is able to give you a heavy upward movement, and it breaches the 4291 zone, and then on Tuesday it further moves up to 4370, and then on Tuesday it comes down, or on Wednesday it comes down upon hitting the 4370. Okay. Third scenario is that there comes a gap down open, or a heavy gap down open. But even with that gap down open, first it will move up, but the upward movement, it will be limited, or it will be dull. Then it will come down, and on Monday, Tuesday, okay, you will see that it is coming down. It will find support at 4185, that is the 200-day moving average, and then it will see a retrace in the rest of the week. So guys, if you are the member of my YouTube community channel, then you need not to worry. I will keep you updated on the daily basis. I will give you the daily analysis of the SP500, and I will tell you what is happening, what is not happening, and accordingly you can take your positions and you can trade. And the people who have not joined my YouTube community, so they can look into the technical analysis, the probable movement that I have defined, and they can look into other factors that will be there in the market. They can analyze those factors, and then after analyzing those factors and this analysis, they can trade accordingly. So guys, again, if you have not joined my YouTube membership, you can simply click on the link provided in the description of the video and also in the comment section, and you can join my YouTube membership and get the daily S&P 500 analysis. And guys, if you have not subscribed to this channel, then you can subscribe to this channel and click on the bell notification icon so that you can get the timely notifications of the S&P 500 technical analysis. And other than that, the other informative videos like S&P 500 manipulation videos, the outlook for the S&P 500, the technical indicators. So guys, this was my S&P 500 technical analysis for the week of August 15th, 2022 to August 19th, 2022, that is Friday.